Welcome to this JetShip Worldwide presentation, Shipping from Canada. This presentation reviews 10 key things you need to be aware of when exporting from Canada. Though each subject is broken out for easier navigation, it's best to listen to the entire presentation. It takes around 10 minutes. In doing so, you'll better understand how each subject relates to each other. To assist further, an accompanying PDF with the reference links is available on our website or in the description below. If you find this information useful, please hit like. We appreciate your feedback and it helps us to deliver such valuable content. Let's get started with the export declaration from Canada. Export declarations for shipments from Canada are required for goods valued over 2,000 Canadian dollars or otherwise restricted. Non-restricted exports to the U.S. do not require an export declaration. Reporting is via the Canada Export Reporting System, or CERS. And note that the Canadian HS code necessary for export may differ from the tariff classification necessary for import to the destination country. Commercial invoice. If there's one key takeaway from this presentation, it's the critical importance of having a detailed and accurate commercial invoice. Generally, a commercial invoice doesn't have a required format. It's just most important to make sure that your invoice includes all the necessary data. Our blog on commercial invoices helps explain what data is necessary. One of the most overlooked aspects of a commercial invoice is ensuring that it has a complete description of the goods. Description should strike the right balance between not being overly vague, by, for example, using descriptions such as car parts, clothing, machinery, or samples. On the flip side, the description should not be overly specific, using some wonky, widgety thingamajig wording for some obscure industrial part that no one understands. The Goldilocks solution is to provide both a broad, widely understood description that everyone would understand, along with more specific industrial-type details, including material content, product features, and the intended use. Keep in mind, much of what we discuss in this presentation is information that should be included on the commercial invoice. Harmonized code and tariff classification. The description of the goods provided on the commercial invoice provides the basis for classifying the items for customs entry using the Harmonized system. Ideally, the commercial invoice should include the Harmonized code applicable in the destination country. Let's step back and delve into the Harmonized system itself. The Harmonized system is a universally acknowledged method for categorizing almost every item imaginable. Each country has their own version of the Harmonized system, and while there are similarities, it's important to realize that a Harmonized code or tariff classification is unique to each country. Our blog on Harmonized codes explains the system in more detail and includes a helpful video. Most countries, including Canada, have online resources to assist with tariff classifications. To find a Canadian HS code for export, consider Canada Export Development Corporation's Tariff Finder tool. Most countries have online resources to assist with tariff classification as well. Some countries simply publish the raw tariff schedules, while others provide tariff lookup tools starting with the product description. Most of these resources link from our HS Code blog. They're also easily found on Google. A great resource to consider is to ask local customs authorities in the importing country for assistance. This is referred to, or often referred to, as an advance or binding ruling. Having an advance ruling from your customer's national customs authority helps facilitate sales. And a ruling from a single European country can apply across all EU countries. The time frame varies, but usually is around a month or two. We highly recommend getting an advance ruling whenever possible. A kind reminder, if you find this presentation helpful, please hit like. Again, we appreciate your feedback in the comment section as well. Now let's discuss country of origin. Just as shipping from Canada is not the same as shipping Canadian origin goods. Canadian origin goods mostly refers to those that meet the rules of origin defined within a Canadian Free Trade Agreement, which we'll discuss later. All shipments from Canada are subject to standard import processing in the country of destination. The default most favored nation or column 1 duty rate will apply, unless the goods qualify as originating. And if you're shipping to a business, be sure to include the consignee's business identification number on the invoice. And note there are restrictions on specific categories, including such things as food, drugs, and alcohol. Declaring a value. In the majority of cases, the correct value to declare at export and import is the transaction value. The transaction value is simply the price paid or payable for the goods, most often the value on the commercial invoice. With the exception of the United States, most international customs authorities consider the value for duty to include the cost of shipping and insurance. This is known as a CIF value, cost, insurance, freight. It's best to separate these three costs on your invoice, either to make sure you don't unnecessarily pay duty or to avoid having a shipping cost arbitrarily assigned by the importing customs authority. If the transaction price on the invoice is inclusive of shipping and insurance, you should include the term CIF value. And a quick note that the term CIF is also used as a shipping term, which we'll discuss later. In some cases, the transaction value is either not possible or will not be accepted by the importing country. This can occur in such cases when the importing goods are such things as free samples, warranty parts, or a gift. In such cases, the value of identical goods and then the value of similar goods are the next methods in valuation. Each method of valuation follows in hierarchical order. Note that the intercompany transfer and transfers between related entities complicates things, not just for import, but also has tax implications. In these cases, what you may view as a true transaction value will likely not be accepted by customs. And note, there's a difference between value for duty and value for tax. Very simply, the value for tax includes the cost of the goods plus duty. Import duty and entry preparation fees. In most cases, import duty is determined by three main factors: tariff classification or HS code, country of origin, and value. The tariff classification and country of origin determine the percentage to apply to the value for duty. Note that sometimes duty is based on volume, number of units, or weight, and other measurements rather than value. But even if imported duty-free, all goods are subject to other import fees, such as tax and entry preparation fees and carrier disbursement. Visit our blog explaining international import fees and how they are calculated for more information. Shipping terms. While the shipping terms themselves can be rather complicated, the basic idea is to determine who, between the buyer and seller, pays for costs related to shipping. There's a whole list of terms called Incoterms, which are published by the International Chamber of Commerce, which cover all sorts of scenarios. The default shipping term used by most carriers is EXW, that assigns all import duty, tax, and related costs to the importer. If, for example, you sell and ship the goods to Germany, the default terms or the German customer would be responsible to pay the import duty and entry preparation fees. Some carriers refer to this internally as delivery duty unpaid or DDU. If you choose to pay the import duty and taxes on behalf of the receiver, you can choose a delivery duty paid or DDP option. A delivery duty paid option is available by most carriers, usually with a surcharge. Canada's free trade agreements. Canada's largest and most impactful free trade agreement by far is the USMCA-CUSMA Free Trade Agreement. But this agreement is but one of many free trade agreements enjoyed by Canadians. With the notable exceptions being India and China, Canada has free trade agreements with virtually all the world's leading economies. And with the trade tensions between the US and Canada, these other trade relationships are becoming more important. Free trade agreements facilitate trade in both goods and services. For merchandise or goods, the key advantage is that duty-free import for what is referred to as originating goods. And each agreement have general rules that outline how goods can qualify as originating and thus duty-free import. These are known as rules of origin. In addition to the general overall rules, there are specific origin rules for certain categories, for such things as automotives and textiles. So, while it can seem incredibly complex, because while it can be, free trade benefits are there for the taking. If it was made, grown, raised, or extracted in Canada, and you're shipping to a country that has a free trade agreement with Canada, it likely qualifies for duty-free import. Be sure to include a certification of origin if you wish to take advantage of one of Canada's free trade agreements. Visit our blog on Canada's free trade agreements to learn more. Shipping and logistics. The best way or mode of shipping depends primarily on the size and weight of your consignment and shipping volume. Canada Post options are best for sending personal shipments and for the occasional e-commerce parcel. Large e-commerce volumes and business-to-business regular orders can benefit from consolidation and zone jumping processes direct to a specific country or region. For heavier packages, FedEx and UPS Ground are the preferred option to the United States. For overseas destinations, FedEx, UPS, and DHL air options are usually best for commercial shippers. Trucking to the United States and international sea freight are best for large commercial orders. And these are just some of the factors our team considers to find your best shipping options. The international parcel options from Canada include the obvious choices of the name brand couriers, FedEx, UPS, DHL, and Canada Post, either directly or via one of their partners. Hint, hint, Jet Worldwide. In general, local post options are best for individuals shipping personal packages. To really grow your international business internationally from Canada, you can benefit by consolidating and shipping your orders in bulk. Minimum volumes are necessary, but this is truly the best way to build a competitive offer. Benefit from using your existing Canadian facilities for fulfillment, and at the same time, localize your offer cross-border. Contact our team for details. Jet Worldwide provides international logistics support. If you ever ask the question, wouldn't it be great if we had a partner with international expertise to give us greater global access? Well, now you have the answer. Jet Ship Worldwide. Contact our best-in-class logistics team for rates and global project support.